Hello friends, this is Raj Sastry from Raj Option Trading. Today is July 9th, 2023. Hope you're all doing well. In today's segment, let's take a look at how to trade options like a pro and make money from it. So with that, let's jump in and get started. Look, from a market perspective, we got here S&P 500 has been going very well, as you can see here. Nice uptrend. Now there's a small downtick, as you can see here, and VIX is showing some strength here, so volatility is going higher. Could be good to look at some great stocks to sell premium and also buy some great call spreads. And look, Nasdaq is has a great run and now showing some resistance, as you can see here. So we can look at some great names in Nasdaq also. Look, Russell is pretty much up and down with all the banking worries. Russell came coming down here big time, and look, nice bottoming out here, and now it's trying to go higher. And then you got bonds. Bonds are going lower, and interest rate is slightly going higher, as you can see here. We can expect probably two more rate hikes, 25 basis points, according to Jerome Powell, our Fed secretary. And look, crude oil is trying to slightly go higher, and gold is coming down. The gold has lost its previous status, I would think. It's trying to see where to go, and dollar is coming down. That's a great sign for the stock market. And look, as you go into fear greed index here, look from a fear greed index perspective, we are in the extreme fear zone, extreme greed zone here. So it's only natural for us to get back to probably greed zone here or even to neutral. So expect some short volatility here. Stock market can come down slightly, but look, only two more rate hikes, and afterwards Fed might keep the rates at that level. I don't expect a recession or a huge correction, but expect some volatility and maybe some drop. Keep some money ready, and you could do some buying and selling using options. All right, so with that, let's jump in here into finviz.com here, one of my favorite platform here. Look, from a Finviz perspective, we got here on Friday, Dow Jones down, as you can see here, Nasdaq down, Russell down, all these indices are down. And if you go into a little bit bigger picture here, we can go to futures market and go to indices here and look what's going on here. We got a 1 year chart here. Look, clearly Dow Jones is look, it's kind of hitting the resistance here, coming down slightly. Same story with all the indices. They are trying to, hit the resistance and coming down slightly, as you can see here. All right, so with that, let's jump into one of my favorite platform to do options trading. Many of you asked me how to identify great option trading stocks. So I will take you to my favorite platform, which is barchart.com. Look, as you go into barchart.com, there are a lot of things that you can do here. You could go into stocks, look at the stocks. There's a lot of information here. In today's video, we'll go into options and look at my favorite options trading strategies. I will talk about two of them today, and we can talk about more later. As you go into bar chart, I recommend Barchart Premier. It's about around $200 per year. It's a very low price compared to other platforms which charge a lot. Barchart Premier does not charge you a lot, and there's a lot of great information. I will take you into my favorite strategies, at least two of them in today's video, and tell you how to identify great stocks to trade options. So with that, let's jump in here. I will talk about two strategies today. First one is bull put credit spreads here. So everybody needs a cash flow generating engine. The bull put credit spread can be a great cash generation engine. So let's jump in here to bull put credit spread here. As you go into this here, look, this platform gives you some filters by itself. Look, there is a bull put spread done by this platform itself, which is Barchart Premier. But I love to look at and create my own filter. I have created my own filter here. This filter is called bull put stock option here. And as you can see here, I'll quickly talk through the filters here. Look, from a filter perspective, I want to keep it very simple here. I want to make sure the price, last price is over 30, and I kept all these things empty because I just want to see these columns in my screener. That's why I kept them empty here. As you go through here, I got a market cap, especially when I want to have a cash generation engine. I don't want to look at very low cap stocks here. That's why I said 30 billion plus here, so that way I can consistently trade in and trade out and make money using this bull put credit spread. And look, we got a few more things here, and I want to make sure I have earnings date also, so that way it's good to look at the earning date when you sell, when you trade options. And we got a few more things here. IV or implied volatility, leg one, IV percentile, IV rank, and look, we got various things going on here. One important thing here is, look, we got the profit. I want to make sure when I sell bull put credit spread, at least I get 75 cents here. As you can see here, that's why we got 75 cents. And I want to make sure I want to sell a credit spread with either 10 to 25 strike differential here. Basically, the width of the bull put credit spread is between 10 and $25. That's why I want to keep it like this here. Some folks like to sell $5 wide, but it's generally good to go 10 to 25. There you can, there is a good chance of making money there. And look, max profit here. I just kept it 5 year. We will see, we'll get the result in the screener. And look, we got delta. Delta is very important. When you sell put credit spread here, the leg one is your short strike here. You want to make sure on the leg one, your delta is between 0.090 and 0.20. You don't want to go too close to the strike price. This will give you, it's pretty much below the current stock price. That's why I kept it like this. Some folks like to see 0.25 or 30. We could do that too. For this example, I will make it 30 here. We can look at that too. And then we got here maximum profit, 75 cents, like we talked about earlier, and days to expiration. I love to trade between 30 to 70 here. If you want to change it to 20, you could do that too. Let's do that for this example here. And then look, in this screener, I want to look at just the stocks. That's why I just put stock here. And look, everything else, I pretty much kept it empty here. Let's click results here. Look, from a result perspective, we got 129 bull put spreads here. And what we can also do here, I don't want too many results here. From a profit perspective, let's go in here and just say profitability here. Let's say $1 here. I don't want 75 cents. I think that's the only place I have. Let's quickly look at it here. Max profit dollar. I will remove this. I got this one twice. Let's remove that one here. We just have just one. All right, so we got that here. Let's see results here. Should be a bit less. There we go. Now we got a good list here. So what I would also do, we don't want to go too close from a delta perspective. Let's go back here to the delta. Let's go here, strike one. Let's keep going down here. Delta, I would dial back to 20 here. We don't want to be hero when the market is coming slightly down here. This will give you, this is a very conservative strategy. Go between 0.09, which is 9 delta, and 20 delta, which means the strike price itself is below the current stock price. All right, let's go in here and see results here. Look, just 52. I will just save this. As you save this here, you can give a screener name here, and you could give some description, and you could say what view you want to see. There are a few choices. You can look at multiple choices here. You got main, filter, and dividend earnings. Filter view is the one I want to see here. and I want this to be sorted by total open interest. I want to see stock with the most open interest at the top. So these are very liquid. I can trade in and out and make some good money. Slippage itself is less. All right, so with that, I will save this and let's jump in here. All right, look, we got our result here and see what's going on here. We got few stocks. So we got Tesla, and Tesla is at the top, as you can see here. And look, we got Tesla. Just to talk through this slightly here. Look, we got stock here, and we got percentage change. Tesla came down by 0.776% on Friday. And look, it's in a bullish trend here. 5 day, 10 day, 1 month, 6 month, 52 week, 2 year, all positive. Look at the 5 year performance of Tesla here, 1.19, 1190. Great performance. It's in a bull trend, as you can see here. I love to see this, the trend itself. And then you got your price volume. Tesla is the most liquid stock, as you can see here. Price times volume is highest in Tesla, 31 billion, as you can see here. And then you got market cap. Tesla is trying to approach $1 trillion mark here. It's 886 million right now. And then you got relative strength index. I love to see multiple relative strength index. Look, I got here 50-day relative strength index, 20-day, 14-day, and 5-day. Most folks love to look at 14-day relative strength index. I love to look at even 50-day, mainly because many of the strategies we do when it comes to bull put credit spread, it's around 45 days to expiration. 50 comes close, even though Tesla is going gangbusters. Look, 14 days 66, 50 days 61. That tells you it's still around the middle of the range. There may be still few more room to run for this stock here. And then look, we got moving average. I love to look at the moving average also. Look, we got 5-day moving average is 275, and we got 10-day moving average and 20-day moving average, as you can see here. And look, as you can see here, we got 5-day moving average 275, and the current stock price is 274. That tells you currently stock is below its 5-day moving average. So you can keep that in your mind. A little bit bearish right now. That's the good time to sell some credit spread when the stock is slightly coming down here. And as you can see here, we got a 10-day moving average 263, and we got a 20-day moving average 259. The stock is currently above its 10 and 20-day moving average, generally bullish, as you can see here. And then we got earnings page here. Look, Tesla earning is coming close, 7/19, July 19th. So you got to keep an eye on this so that way you don't burn yourself. And then you got IV percentile and IV rank of the stock itself. Look, it's pretty good from a volatility perspective. You could sell some credit spread and make some money here. Look, from an open interest perspective, open interest is a total option contract held by traders. Healthy open interest, 9.2 million, one of the highest, as you can see here. And look, we got leg 1 225, leg 2 215. That's a $10 wide spread, as you can see here. And for this $10 wide spread, you will get, let's see here, you will get about, let's see, leg 1. What we'll do here is we'll add a profit also here, so you can look at the profit and go from there. Let's do one thing. Let's go back to the filter here and let's look at credit. All right, let's add a net credit here. So you can take a look at the net credit also. Let's go and add. And as we add, I don't want to see net credit at the top, first column. I will pull it all the way down here. As you look at the option related information here, let's keep going down, going down here. Net credit is right here. I'll even pull it down here. Net credit, let's go here. All right, so I want to pull it right here after leg 1, leg 2, strike differential. I will just put it right here. Where is my net right here? Let's take this here. All right, I'll drop it right here. That should be good enough for me. And we got expiration leg one, leg two. Oh, that's great. Let's go in here and see the result again. I will also save this so it's saved. All right, so we got our uh, bull put trade spread here. So we are talking about Tesla. Look, Tesla $10 wide spread. You'll get $1.10, which is $110. And as we scan through this here, look, we got a max loss 890, which is 890. Look at the probability of break even, 87% probability of break even, which is a great number, which tells you if you keep selling these type of options, which is a bull put trade spread, 87% of the time you'll make money, which is great. And look at the delta. We are actually going after very low delta here, 0.12. That tells you for stock to reach our leg one, which is 225, from the current price of Tesla, which is super high. Look, current price is 274. There is a lot of room for it to go down. That's why it's a very conservative strategy. And look, we got a net credit here, $10. Great. We could take these type of trade all day long. And then you got a few more here. Tesla, depending on how much bull or bear you are, how much conservative or not, you can keep watching the delta here. Look, as I go here, keep watching the delta here. Now look, we got leg one delta. You got to watch the leg one delta because leg one is your short strike. You are selling the leg one, which is leg one put here, and you're buying back the leg two put. That's why you got to watch the leg one delta. And if you're very conservative, stay within 0.15 or 15 delta, as we call it. If you're a little more aggressive, go at 17 delta or 18 delta. As delta increases, the net credit that you receive, as you can see here, will go higher. And these days, because Tesla is bullish, I typically tend to go a little bit higher on the delta side here. I would go here at 18 or even 19, and make some good money here. And depending on your bullish or bearish nature here, look at the price, the strike differential here. Look, I love to, depending on your account size here, if the account size is low, you could go with the either $5 or $10 wide strike difference here or width. But if your account is a little bit bigger size here, go with 25 or say 20 strike or even 15 strike for that matter, and you will receive more money here. So this is a great way here to really do a quick scan. Bar none, Barchart Premier is great tool. I use this every day here. I love to do Thinkorswim also, but I love Barchart Premier just because I can look at multiple data points. As you can see here, I can look at how the stock has been doing. I could even add 10-year performance here, and I could see all the data points in a nice fashion here. That's why I love Barchart Premier when it comes to option scanner. It's a very low cost, just $200 for 1 year Premier, which is a great investment if you are into option trading. All right, so this is a great one here. Look, we got 52 results here. And typically what I do is, most of these stocks, I think everybody knows these names here. But look, if you want to do a little more research, what I would typically do is I go and download this. As you can see, I just click here and download. Look, we got the spreadsheet, from uh, from this barchart.com. Look, we got all these names. I love to take these here, and I would just go in here and put them here. I would just go here and go to data and just filter, as you can see here, and I would say advanced filter, and I want just unique record only. So look, we got just few of them here: Tesla, DE, and so on and so forth. We can take them here. I would say page special here. We got few names here. Let's just say page special. and let's say values here. There we go. We got just few names, not too many. Sometimes if we don't know what stocks to sell put options here, one of my favorite way is to take this into in a charting platform like the one right here. We have here, which is finviz.com here. Just drop them right here and go. Look, we got these names here. If you have Finviz Elite, you could look at a few more things here. You can see with the float chart. Look, we got float chart right here. Look, we got Tesla still slightly high float chart here, and Palo Alto Network a little bit high float chart. And then you could go into chart here, and look, we got nice looking charts coming in here. We got Baidu, a Palo Alto Network, which has been going gangbusters now, trying to come down slightly. And we got a few more Tesla, United Health. This is one of my favorite off late here. Stock has been coming down double bottom. The moment you see a double bottom here, that's a good sign. It might go higher. So I would look at a stock like UNH here and buy, sell some put credit spread here and make some good money here. Even Tesla, I like this one here. Elon Musk, he wants to make sure Tesla hits $1 trillion, just like Nvidia. He will, make all his efforts to, make sure Tesla hits that. So that there's, few more up days for Tesla. You could basically sell some Tesla put credit spread, as you can see here. And we got Baidu here. Baidu, you got to be careful, Chinese company. Got to be slightly careful. But overall, as you can see here, it's showing some positive trend. It could be good to really sell some put credit spread down here and make some great money. And what we can also do, many times, many folks, including me, just by looking at the chart, we don't want to sell some put credit spread. What you could do is you could go into my favorite platform, which is, Stock Rover. When it comes to doing the fundamental research, no other platform comes even close to what Stock Rover can offer. That's why I love this platform. I would just go here to Stock Rover and I would create just a watch list here. I would just go here and just create a watch list. I would call this um, my option watch list or just a bull uh, credit spread. You can even say bull put credit spread here. Just I just want to tell you how easy it is to create this watch list within this platform here. Just put those names. Those are the names to sell put credit spread at this time. You could just save it here. Actually, before save, just hit enter, and we got our names. Just save it here. And what I love to do is I love to go into few of the layouts here in this platform. There are a lot of layouts, as you can see here. I'll say showing the table, and I would go into, yeah, this is my layout here. Look, I got a stock rover ratings here. So out of these four stocks here, we got Tesla, Baidu, Palo Alto Network, and UNH. You can see here we got Morningstar growth for Tesla, it's B, and we got here Palo Alto Network, it's B. Other two, Baidu and UNH, it's C here. And as we scan through here, look, we got Palo Alto Network from a profitability perspective is F, and Baidu is a D, as you can see here. UNH is pretty good here. Just by looking at this here fundamentally, I would probably sell put credit spread on Tesla here, which is look at the ratings here, great ratings here, and overall rating is 97. I would sell put credit spread here. I would not do Baidu here. Look, it's not great from a profitability perspective. Palo Alto Network profitability is not there, but look, overall rating is good. I would sell some put credit spread here also. And look, we got UNH. UNH is also pretty good, solid here from a profitability and financial perspective. And because this one has fallen down here, I would sell some put credit spread here also and go from there. Look, from a RSI perspective, relative strength index perspective, UNH is the weakest. When you want to sell put credit spread, if you go after a solid company which is beaten down here, like UNH, that's a good way to make money here. And then look, Palo Alto is also slightly down here. I would go, basically UNH, Palo Alto, and Tesla, and go from there. And we could look at, maybe one or two here. Let's go to Thinkorswim platform to trade mode here and say Tesla. Look, as you go into Tesla here, let's go to the option chain here. We got Tesla, as you can see here, 40 days out is great. You could go all the way down here. Look, we got a, keep watching the delta here. You can go into 20 delta. Look at the nice and high open interest here, 9,000. You could go to 240, and you could even do 230 or 220, either way. Let's go here and sell and say vertical. All right, so we are doing 240 and 230 here, $10 widespread here, and look, you get some good $195, which is great here. You could just go in here and go to analyze trade. Let's go analyze here, and I will remove all these things here, and let's go all the way down the vertical spread, and let's go here, set the slice to break even, 819, and you can also do 8 July, go to 819. There you go. Look, 73% probability of break even. That's a great number. We could do this all day long here. And understand that the earnings coming up, you got to be slightly careful. That's one of the reasons we went all the way down, even though Tesla is at 274, our short strike is 240, just to be conservative. And you could also do one more thing here. Instead of doing this one here, you could also go into a little bit you know longer range. You could go to 60 days out here and keep watching the delta. Look, we got 20 delta right here, which is 233. I would go here to 230, just a round number here, and you could sell this one also here. And look, we got there you go, vertical 230, and you could go to 220 here. There you go, $10 widespread. We get even a little more money, as you can see here, and you're actually going even below to at 230. You see a short strike, and the stock is trading at 274. So it's a great way here. You could make some great money, and you could also look at the profitability of this year. Go to analyze trade, and let's remove the previous one here, and look, September 15th, you could go here, set slices to break even, and you could go right here and say 916 or 9, yeah, 916 here. There you go, nice profitability, break even probability here. You could just do this all day long. You could do same thing on the other two names here. We got basically we selected Palo Alto and UNH. UNH being the you know most beaten down here. Do the same thing on these two stocks here and go from there. All right, so now look, what we have done is we are generating the cash here. This selling the put credit spread is a cash generation engine. you know like many investors know here, just generating the cash is okay, but you also need a capital appreciation. So when it comes to capital appreciation, my favorite strategy is to sell call credit spread. Look, you can go in here, and you could go into call debit spread, actually bull call debit spread. You could go in here, and look, we got my favorite filter already set up here. I can go walk through this filter here. Nothing great. I want to make sure the stock price itself is more than $30, so that way I don't get into low price stocks here. And otherwise, yeah, pretty much I kept everything empty, as you can see here. Days to expiration is 60 to 120. When you sell call spreads, it's good to have time on your side here. That's why I made it 60 to 120. And I want to look at just the monthly to begin with here. If you want weekly, you could select weekly also. And that's pretty much here for, and one more important thing is we got delta somewhere here. Let's keep going up here. Look, we got delta, big probability, volume, open interest, keep going down here. Or it looks like in this one I did not put delta. That's fine. Let's keep going here. We got leg one, leg two. That's fine. I think what we've done here is we got our open interest, which is over 500, as you can see here. We got money nest here and volume and so on and so forth. What we'll do is we'll add the delta also here, so that we got the delta also added here. All right, let's go in here and just say delta, and I could add leg one delta, and I could also add leg two delta. All right, so we added these two here for this here leg one delta. Um, let's put a value here. We don't want to go very close to stock's price here, so we could just say I think this should be good here. I would say 0.10, which is below the current stock price, and 0.25. I think uh, that should be good enough here, and you could go from there. If it's a very high delta, you'll end up paying too much money. I think this should be good enough. Let's start with this and go from there. What I will do is I will pull this down here, all the way down. So let's pull it near the options here. We got delta. Oh, we got delta leg one. Keep going down here. All right, so I will add it right here after the net debit here. There you go, strike differential. I will put it right here. Delta leg one, and pull that other one also all the way down here. All right, we got delta leg two also. And let's run this and go from there. Look, we didn't get anything here. Let's do one thing. Let's remove the delta for now. Um, you can see what the values are and go from there. Let's run this here. All right, so we got 34 tickers here. As you can see here, we got 34 stocks, which is great. And we got our bull put trade spread. We got filter view. And as you can see here, top of the list is Google, which is one of my favorite stock, as you can see here. And Google, look at the relative strength index. 14-day relative strength index is 47, which tells you Google is beaten down right now. Even if you look at 50-day relative strength index, it's 54. It's a beaten down stock. And look at the performance here. 5-year performance is 98%. And 1-year performance is barely positive, as you can see here. It's a great stock which is beaten down. I would be willing to sell this call spread here. And if you scan through here, look, we got IV rank, which is 36, slightly high. That's why it's good to sell put trade call trade debit spread here. And as you can scan through here, look, we got other data. Earnings is coming up 725. That's why I would not buy a single leg call. I would buy a spread here, so that way you can make money and hold it a little longer. You have less theta decay when you buy the spread. As you can see here, we got expiration 9/15. We got 2 more months to go. Uh, Date to expiration is 69. And look, net debit, you're paying $6.29. It's a $17 widespread. You're almost more than doubling your money. You could sell this one and make some money. You know, with all the debit spreads here, the break-even probability is a little bit low here. That's one thing to keep in mind. So if you want to be a little more, certain, you could go after with a little bit higher break-even probability. For example, you got Microsoft right here. Look, the break-even probability is 50% here. And look, it's days to expiration is 104. Microsoft, as you can see here, relative strength index, which in 14, look, we got 14 days, 54, slightly high, but it's a great stock here. You could do this also. Then we got a few more here, AMD, PayPal, and so on and so forth here. All great ones here. What you could do is you could do same thing here. I typically like love to look at this, using my fundamental analysis tool, which is Stock Rover. I would just download this here. Click on download, and look, we got our bull call debit spread here. And we could do the same thing. We got all these symbols here. We could take them here and take one more, create one more tab, copy this, and same drill here. We go to data and advanced and just say uh, unique records only. There you go. We got just a handful of them. And you could go back here to stockrover.com here, and you could just go create one more watch list here. This time I will call it a bull call credit spread or debit spread. There you go, and drop the symbol right here, and voila, all done and show in the table. And let's see here. Look, we got our names right here. As you can see here, we got Morningstar ratings here. We got Roblox. I would probably not go here. It's quite a growth here, but look, financials are not great. Overall rating is 30. I would probably not go here, because you got to look at great names here. PDD, I would not go here. Look at that probability F rating. I would not go there, and I would go off a little bit solid companies when it comes to profitability and financial. Look, AMD is the one I'm comfortable with. Look at the nice growth rating here, and look at the nice financials and overall ratings. I would go with this one here, which is a good one here. And as you can see, we got a few more here. I would not look at PayPal at this time here. Fintech names are still not doing great. And I would look at this one here, VLO. Look, VLO looks like it's pretty okay. It's got a growth and profitability B score here. You could look at that one too. And I love Google. Google is always great. You could go GOGL, great one here. And look, Target is beaten down big time, like many of you know here. You could do Target also. It's a beaten down name. Look at that RSI 42 tells it beaten down. Target can come higher as you go forward. And you could do Microsoft. Look at Microsoft fundamental rating here. Rock solid. You could sell some, buy some call debit spread. Make some great money here. I would typically not go with the Citigroup here. It's a hit and miss of late, but rather I would go after either Chevron or ExxonMobil. As you scan through here, Chevron could be a little bit better here. Overall rating is 55. It's a little bit better than ExxonMobil from a fundamental perspective. I would do something like this and go from there. And let's go into Thinkorswim platform here. So you could go into Microsoft. And look, let's go back here to our platform here, which is barchart.com. Look at Microsoft right here. Let's keep going. Look, we got Microsoft. We are looking at Delta 36, Delta 57. So we could look at one of these spreads here. Let's see here. Microsoft current price is at 337, as you can see here. As you scan through here, we got Delta leg one. Let's go back here to this platform. And when you sell calls credit spread here, it's always good to do in and out. You could go right here. Current stock price 337. Look, we got 330 here. And keep watching the open interest here. Nice open interest right here at 340. And Delta is 52. You could do this here. Or if you're a little more conservative, you could even do 335 and 445. We just do this here. High, vertical, 335, and you could do 345. There you go. You could sell this call spread here, $10 wide spread. And look, you got you have to pay $5.05. Remaining $4.95 is your profit potential. You're almost doubling your money. And you could just go here and analyze the trade. Look, we can just remove all these things here and just have our vertical spread right here, and it will say set slice to break even 916 and go back here. I think that's good. 916 is good. Look, it's a nice one here. Look, chance of profitability or breaking even is 47%. Typically, debit spreads are a little bit less profit. For a debit spread, it's very common to have lower profit break-even probability, which is very common. So with that, we'll end it here. So please give a try to barchart.com. You could start with a free subscription. If you really like, you could subscribe to the Premier subscription, which is a very low cost way of investing and trading options and doing some research. I will leave the link. And with that, thank you very much. Happy investing and trading. Please subscribe.